After years of avoiding Tesla, the dean of valuation, Aswad Damodaran, finally bought the stock.
I bought Tesla just a couple of weeks ago.
Tesla was the only stock in the Magnificent Seven that he didn't own, so let's see what made him buy the stock during a bearish trend when the stock price is falling. Moreover, we'll see what massive prediction he made about the robotaxi. On top of that, he also values each part of Tesla separately, and we'll see how much the auto, energy, software and robotaxis are worth. But before we get into the valuation, for those who don't follow Aswad Damodaran, first of all, what are you doing? And secondly, he's a professor of finance at NYU and one of the most respected experts in valuation. After teaching equity valuation for more than 30 years, he has a deep understanding of the principles around valuing a company. But besides being the most notorious investments teacher, he's also a stock picker, and throughout the years he made some incredible bets.
Other than Tesla, which I bought a couple of weeks ago, the other 6 companies I bought at different points in time. Microsoft in 2014, Apple in 2017, Nvidia in 2018.
So let's see if Tesla is ready to have its 2018 Nvidia moment. And this is not the first time when Damodaran values Tesla. He did it almost every year since 2013, and he made several bold calls that in hindsight were proven to be right. For instance, in November 2021, when Tesla was $1,200 before split, he saw it as overvalued, and then the stock dropped 70%. Still, he also passed on Tesla stock in its early days, and the stock provided one of the best returns in the market. So it looks like he's acting on the cautious side of valuation, as he seems to be looking at numbers first and only buying when the story makes sense. Last time he bought Tesla was in June 2019, and in only 7 months he made a return of 300%. So let's look at the secret that he uses for the valuation.
To put a number on something, you can do one of two things. You can estimate the cash flows you will get from owning the business, or you can look at what other people are paying for similar businesses. That's it.
And the first part is the automobile business. And later we'll see that the software and robotaxis might bring in some massive numbers, but for now 81% of the revenue comes from selling cars. And when thinking about the auto business, there are 2 things that we need to keep in mind. Firstly, the electrification trend continues, and secondly, Tesla remains the leader of pure electric vehicles with 20% of the global market and 55% of the US EVs market. But even if competition isn't taking market share, Tesla still had a very tough 2023 with only 19% revenue growth and an even harder 2024 for which the company didn't even offer guidance. And for now, Tesla's response was a string of price cuts applied throughout 2023. And while many people believe that the price cuts are a mistake since Tesla's margins are crushed, other investors argue that this was a strategic move. But if there are some probable long-term benefits, then why is the stock crumbling with a 30% drop in 2024? Actually, it got so bad that at one point Tesla was the worst performing stock out of the all S&P 500. But Damodaran argues that's simply because of the type of business that they run.
Tesla's gross margins are low because it has to make cars. Cars are expensive. The unit economics work against them.
But even with the current difficulties, Tesla's manufacturing remains phenomenal, as Damodaran argues that it uses much lower capital investments than the industry's average. And moreover, another important aspect for the long-term growth is that Tesla has loyal customers that simply love the brand.
The Tesla customer base is loyal to a fault. Not only are they loyal in terms of being loyal to the brand, they're evangelists. They seek out friends and try them to buy Teslas as well. In fact, Tesla's biggest sales force is its own customers.
Now, putting all this together, the fact that Tesla is a market leader, that it has incredible manufacturing, and that their customers love them, Aswad Damodaran estimates around $500 billion in automobile revenue in 2033, growing from $97 billion in 2023, which is an annual compounded growth rate of 17.8%. Considering an auto operating margin of 10% and discounting it back using a 10% cost of capital, the value from the auto segment is around $371 billion, which translates into $116 per share for the automobile business. But besides automobiles, the next segment that will fuel Tesla's growth is the energy business, which improved its margin significantly while still growing fast.
We expect the energy storage deployments for 2024 to grow at least 75% higher from 2023. And accordingly, this business will begin contributing significantly to our overall profitability.
Damodaran argues that this margin improvement came after Tesla made a strategic move.
Tesla has shifted away from generation to storage over the last few years, and it's paid off. And the potential for the future for Tesla lies in the storage business. And I think it's well positioned because it has a technological edge over its competitors.
Considering Tesla's edge in the energy business, Damodaran estimates that it will generate a revenue of $80 billion in 2033 with an operating margin around 16%. Using these assumptions, this would result in around $25 per share for the energy business. But besides energy, Tesla has one more segment with immense growth potential.
FSD, full self-driving. Now, on the plus side, Tesla is clearly further along the road than any other automobile company, not just from a technological standpoint, but also from a business model and a marketing standpoint.
And not only that, but there is one more significant advantage that the FSD has.
Once established, I expect the margins for its software business, whatever that business looks like, to look like the margins for software companies overall.
As a result, Damodaran estimates the software revenue growing from $8 to $40 billion in 2033 at a compounded annual growth rate of 17.7%. Considering a software-like margin of 22%, Damodaran estimates that the software part of the business is worth around $17 per share. Now, let's get into the most important part of the Tesla puzzle, the robotaxis. Tesla just introduced their Uber-like app, and Damodaran revealed that he made a big change into his model regarding the robotaxi story. He argues that the robotaxi business has moved from possible to plausible, and it needs to be taken seriously. So now, the other big question remains when. When is this going to become reality? Because as Damodaran argues, Tesla would risk a lot if they're going to deliver a full self-driving software before it is 100% ready.
There is a very real chance that if Tesla rushes FSD to the market before it's ready, it's going to be catastrophic because all you need are a couple of high-profile accidents and you've set back the cause of full self-driving for 5 years, maybe even 10.
He estimates that it will take Tesla 3 more years, and the first year when they'll recognize revenue from robotaxis will be in 2027 with around $11 billion. From there on, revenues will touch $80 billion in 2033, growing at a compounded annual growth rate of 38%. Moreover, considering a software-like margin of 25%, Damodaran estimates a fair value of $38 per share for the robotaxi business. So, to sum up, what is Aswath Damodaran's fair value estimates for Tesla stock? Considering the scenarios that I laid out, we have $116 from the auto business, $25 from the energy, $17 for software, and $38 for the robotaxis. That equals to $196. Still, we need to deduct the value of the options outstanding, and we get to a fair value of $179, which is around where the stock is priced right now. So, did Aswath Damodaran buy Tesla stock?
I bought Tesla just a couple of weeks ago at 180.
But if he estimates that the stock is worth $180, then a good investor would ask, why is he buying at fair value? Because that implies that he will only get the return of the cost of capital, which is around 10%. And the answer is because the distribution of returns for Tesla stock is skewed towards higher returns.
Tesla is one of those companies where I am willing to buy at fair value simply because I think there's enough optionality, things that might happen in the company. There are 15 things in the fire. Who knows which will pay off? But even if one or two of those things pay off, I get the icing on the cake.
And I cannot end this video without talking about another source for upside, but also a big potential risk, which is its polarizing CEO. Elon Musk made Damodaran label Tesla as his corporate teenager.
I've always called it my corporate teenager, which is I added with open eyes. I know it's going to do things that frustrate me. It's the nature of the company. It's the nature of how it's run.
So, to sum up, Aswath Damodaran is a Tesla bull after buying at $180, and he believes that the stock has upside potential even when considering the cautious estimates. The energy, software and robotaxis offer important optionality to an otherwise great auto business. If you feel like you learned anything of value, please hit the like button and subscribe. And if you want to see the latest financial analysis on Tesla, you can watch this video where I break down the 6 most important things that you need to remember after the last earnings report.